Did you know that Zerodha's active investor base is actually shrinking? You can see here from this chart that this trend has been happening ever since September of 2022, while Groww has been steadily growing to the point where now in September of 2023, Groww has actually overtaken Zerodha in terms of number of active investors. So looking at the hard numbers here, Groww has 6.63 million active investors on their platform as compared to Zerodha, which has 6.48 million active investors at the time of us filming this video. And also, it took Groww half as much time as Zerodha to get to that active user base number.
So yeah, Groww has more number of users than Zerodha, but I don't think that's the right metric we should be looking at. Just look at their revenues and profits. Zerodha is seeing a very healthy growth every year, both in terms of revenue and the profits. And even in FY23, their revenue was 5 times more than that of Groww. So my point is, while Groww is more focusing on getting more users and then just expanding, Zerodha is more focused on building a healthy, profitable and sustainable business. And I think in long term, that's what's gonna, define who is gonna be more successful.
All right, well, with that out of the way, let's jump in. So the topic of today's debate is, can Groww beat Zerodha in the long term? And I'm gonna be arguing from the perspective of, yes, they are on track to overtake Zerodha.
And my argument is gonna be that Zerodha will be a winner in the long term. The way they're building their sustainable and profitable business, I think that's what matters in the long term. And again, these are not our personal opinions. It's just for the sake of this debate, because recently when Groww overtook Zerodha, there was this big debate, right? Who's going to be a long-term winner? And so we tried to sort of give a healthy, balanced, back and forth for this debate. So with that out of the way, let's start.
Okay, so to start things off, I think the most obvious thing, the thing that a lot of people are noticing, is that the barrier to entry when it comes to using Zerodha's various apps is actually quite a bit higher than Groww. Groww has made their platform very accessible, very easy to use, very easy to look at and interact with, very intuitive. And I think that's a pretty big differentiator. I think Groww is able to attract people because of these design choices and these platform choices that Zerodha has kind of focused more on this niche, professional, sort of nerdy customer base, right? People that are really into stockbroking, whereas Groww is making their platform accessible to anybody and everybody, right? Uncles, aunties, parents, and young people, right? People who are just getting into stockbroking and trading for the first time in their life. Also, it's definitely worth noting that Zerodha charges 200 rupees upfront to open a trading and demat account, and they also charge 300 rupees every year for maintenance. Groww, on the other hand, launched their stockbroking platform in 2020, and they don't charge any of these fees, which I think is really interesting because there is a cost associated with opening these accounts and maintaining these accounts, definitely, but Groww is choosing to eat those costs themselves instead of expecting their users to pay for those fees, right? Which is a conscious choice on their part. And I think they're using venture capital in order to sustain these kinds of expenses. Whereas Zerodha, being a profitable bootstrapped company, that's just never been a part of their DNA. Another factor, though, when it comes to Zerodha is that they don't actually have one single app. So there's multiple apps. You've got Kite to invest in stocks. You've got Coin to invest in mutual funds. And even when you go inside of one of these apps, so let's use Kite as an example, there's so much going on here from a UI standpoint. When you click on buy, you're presented with so many options. And a lot of people, if they're first timers, they just have no idea what to do. Groww, though, is a lot more straightforward and simple. So there's one app for everything when it comes to Groww. You don't have to download different platforms, different apps. There's not different websites. It's all happening in the same place. You want to buy stocks? You just click on the stock you want and you buy it. You want to buy mutual funds? You click on the mutual fund and you buy it. It's simple as that. There's no moving across different platforms. There's no complicated user interface. There's no terminology and charts. It's extremely straightforward and easy, the same way that shopping on an e-commerce platform would be, where you just scroll through the UI, you find the item that you want, and you click buy. That's the kind of purchasing behavior that people are used to, and Groww is tapping into that and saying, you can do the same thing with stocks. You can do the same thing with mutual funds. It's just as easy as buying a pair of socks or a new phone on Flipkart or Amazon. And this is the reason why new users are choosing Groww over Zerodha. It's why Zerodha's growth stagnated and Groww has emerged as the platform of choice in India for new investors. And I can't overstate the importance of UX. People will literally make purchasing decisions, or in the case of Groww versus Zerodha, which app or which platform they're going to invest their time into learning just based on this alone. So for example, in the developed world, people will buy iPhones because they prefer iOS to Android, because iOS, Apple has spent billions of dollars making it the easiest platform to use in the smartphone world. In the world of PCs and laptops, why would anyone choose Linux? Well, it's because Linux is actually technically way more powerful than Windows or Mac OS, but nobody wants to use Linux because it's so complicated. The barrier to entry is so high that everyone just says, well, Linux is for nerds. It's for power users, right? So that's the same thing that we're talking about here with Zerodha versus Groww.
So you talked about two main things. First, the entire barrier to entry when it comes to Zerodha and how their entire ecosystem is very complex because they have different apps for different things. I feel, in my opinion, it's not really, a counterproductive thing. It's actually helping them in making more money from these users. And let me break it down for you. So because of this 200 rupees onboarding fees, Zerodha is making sure that you're very serious about investing and you're not just coming to time pass, right? And if you take a look at, if you break down their revenue, 70% of their revenue comes from options and future traders. And these are serious investors, right? They're not there to waste time and stuff like that. And I think on other hand, when we talk about Groww's customers, I'm pretty sure they're spending years and a lot of time and money on educating these users first and then making money out of it. And because of that 200 rupees onboarding fees, the CAC, which is customer acquisition cost for Zerodha, it's actually negative. They're not spending any money to bring people. They are actually making money with every new customer that's joining them. And these are the reasons why Zerodha is making 5 times more revenue than Groww, because the user base is this experienced traders who are willing to pay for the services offered by Zerodha, while Groww's users are these new investors who want to see value before they can start to pay. And the second point about, the entire ecosystem of Zerodha being very complex, just because they have different apps for different things, I don't think that's a bad move. That's a very strategic and very user-friendly move. You can't imagine Google giving all their features in one app, right? You have Maps, you have YouTube, you have Drive and everything else. I think similar to that, for fast, experienced traders, you have Kite, like you're logging in multiple times in a day. And for more passive and for mutual fund investments, you have Coin, right? So these apps are not conflicting, right? Once you're going on Kite, for example, you're very clear that you have to make these multiple trades. And if you're going to, let's say, Coin, you're very clear that you have to see your portfolio and you're not making changes every day. And if you go to Groww, on the other hand, there's everything going around there, right? You have portfolio, you have watch list, you have mutual funds, you have loans. So that's very difficult thing to do, I'm pretty sure. And every platform is suited for different users. There's no one size fit all, right? And I think that's what Zerodha has cracked very well. And that's what I feel Groww will realize with time. And Kite and Coin are not the only apps in Zerodha's universe. For example, for education, you have things like Versity. For investments, you have Small Case. For trading, you also have Sensible. And there's like so many other apps for different things that an investor wants to do. So I just want to end my argument by saying that this targeted strategy of Zerodha, that, for one feature, you have one app, for another need, you have one app. I think that's helping them to build trust among their users. And they can always turn their passive investors into active investors, right? And then can move them from Kite to Coin or Coin to Kite and vice versa, right? And I think that's pretty much visible from their growing revenue and profits every year.
So I think you're right. Zerodha has been able to build a lot of trust over the years. And one of the ways that they've been able to do that is targeting existing groups of people, which, honestly, I would call this very low-hanging fruit. But basically, they look out at the market, they see the behavior that people are doing in this space, and then they build an app specifically for that behavior. They'll build an app for stockbroking. They'll build an app for futures or options or any specific type of behavior. And that does build a lot of loyalty and trust amongst that specific user base. Whereas Groww, I think they're actually doing a lot of the hard work. So you mentioned that they're spending a lot of time and money educating people, right? Where they start with something that's more accessible, something like mutual funds, more passive, and then they're trying to convert those people to more lucrative and monetizable parts of their app, parts of their platform, which they could actually charge more money for, something like options or futures, stockbroking, right? Not just, passive mutual funds. And the thing is, I don't actually think that this would have been possible for Groww if they didn't have access to venture capital. And in fact, Nitin Kamath himself said that they couldn't have built Zerodha today without venture capital because the market is just too competitive. So if they started Zerodha in 2023, it wouldn't have worked out. And the only reason that it did back in 2010 was because there really wasn't a lot of competition. And so they were able to target that low-hanging fruit.
Zerodha, because it started in 2010, because all of those things that happened, we were able to do it bootstrap. But if today I had to start Zerodha, there's no way. There's no opportunity to build a bootstrap Zerodha today.
And a good example of this is looking at these two companies' social media accounts. So looking at YouTube specifically, Groww has multiple channels in multiple languages. And across all of these channels, they have 3.4 million subscribers, whereas Zerodha, they have less than 9.5 lakh subscribers across all of their YouTube channels. And all of this content is being made in English because that's their target market. That's their target demographic. Whereas Groww is going into tier 2, tier 3. They're going vernacular. They're trying to get all of India on their platform. And I think that is the winning approach here. And this is a segment that's basically been ignored by Zerodha. They're really not looking at other languages apart from English, whereas Groww, more than 70% of their users are from tier 2 and tier 3, which I think is a really interesting difference in strategy. And it did take Groww a long time to actually start monetizing that customer base, but they are starting to do that now, finally in 2023. And so I think if we just zoom out here for a second and look at these two companies' different philosophies, Groww has made it their business to target tier 2 and tier 3, right? They're expanding deeper and deeper into the Indian market, and that's part of their DNA. That's part of their philosophy. That's how they operate as a business. Whereas Zerodha, again, they have targeted the low-hanging fruit. They've targeted existing investors, people that are easy for them to access, people who speak English, people who are reasonably well-educated, living in metros. That's their target demographic. But the thing is, there's not that many people in that category. There's only about 30 million active investors in India, and Zerodha hasn't captured all of those people, but it's going to get harder and harder for them to onboard more and more of those people unless they change their strategy and start behaving more like Groww, where they're expanding into the tier 2 and tier 3 markets, going vernacular. But because that's not part of their DNA, I think they're going to have a hard time making that change. And the only way for them to actually start doing that is probably going out and raising venture capital and letting go of this bootstrapped part of their company. And so if we actually look at Nitin Kamath's recent quote from April of 2023, he told the Economic Times that if the market continues like this, there will be a 30 to 40% dip in revenues. New account openings are already down 50 to 60% from all-time highs. And he also said that past performance is no guarantee of future success. And so I don't know. I just think the way that things are changing, the way that things in this industry are evolving, Groww has the strategy that's going to enable them to win. Whereas Zerodha, I think they've been around for a long time. They saw early success, but definitely going into the future, if they don't change their strategy, they might struggle.
So you mentioned about how Groww is, growing in these tier 2 and tier 3 cities. They're finding new markets. I think one thing people have to absolutely understand is it's a VC funded business. And if they're not growing, they're actually dying. So what do VCs want at the end of the day? They just want to grow so that they can get an exit in the next round, right? And on the other hand, Zerodha is a profitable bootstrap business. And what Nitin is trying to be, he's just trying to be a little more cautious, right? And the entire statement that you mentioned that their revenue could dip by 20 to 30%. I think this is not the first time that he has said it. He said a very similar thing in 2021, saying that their revenue could fall by 30% in FY22, but their revenue actually grew by 82% in FY22 instead. And even if things continue to be bad for a while, Zerodha has a runway of 13 years. Even if they stopped making any money today. So what we have here is two companies. We have Zerodha, which is bootstrapped and profitable, right? They have a runway for 13 years. And it's because Kamath brothers hold majority of stake, right? It's their money on the line. So it pays to be a little more cautious, right? They don't have to prove it to someone else. Groww, on the other hand, they're VC funded. And at the end of the day, they have to give exit to their investors, right? Either through IPO or some other thing. And if they stop growing tomorrow, they won't get more VC funding, right? So it's not their philosophy, it's their necessity. If they don't grow, they'll actually die as a business.
I mean, this is the way that it is for any venture-backed startup, right? If they don't grow, they're going to die because their business is built on venture capital. So once the venture capital stops, their growth and their survival stops. That's just the way that it is. And I think all of the startup founders that are building those kinds of companies, they know that. It's a different approach from bootstrapping. It isn't sustainable in the long term, which is why eventually towards the end of that 10-year VC cycle, the companies are expected to turn profitable and then give their investors an exit. They go public or there's some M&A that happens, right? But this is just part of the model. This is how it works. And so let's actually take a look at Groww's strategy to better understand where they are today and also where they're heading in the future. So when they got started, the first thing that they offered their customers were mutual funds. And then they moved into more accessible offerings like stocks, ETFs, gold, intraday trading, not highly technical stuff that the masses of India understand for the most part. But starting off with mutual funds, a lot of people here in India are aware of mutual funds. They're excited about them. And so Groww enabled people to invest in mutual funds at as low a price as 100 rupees. And so for Groww, it's all about quantity over quality. They don't care so much about the size of each transaction the way that Zerodha does. It's more about getting as many transactions happening on their platform as possible and making that a habit, making that something that people are excited to do frequently. And then eventually the size of those transactions will increase as people become familiar and habituated to the Groww platform. And then from mutual funds, they moved to stocks and then ETFs. And so they built out this suite of offerings, but now the bigger strategy here, the bigger play is moving into lending, which is where the real money can be made. So they already have an NBFC license and they're using this to get into India's rapidly growing online lending business. And this was a $270 billion industry in 2022, but it's expected to reach $720 billion by 2030. So to summarize, Groww is kind of offering the Flipkart of financial services where you can pretty much find anything on their platform. And I think that they're adding immense value for their customers and also the monetization potential down the road, especially when they lean even more heavily in the direction of lending, is going to be huge.
I don't know. To me, the strategy of Groww looks like, you throw everything on the wall and see what sticks. But the thing is, that time period is getting over for them now. They have to show the returns. And to explain what I mean, a few years back, there were reports that Groww wanted to build a neo-banking platform, talks of which have drowned out now, and they seem to have let go of that idea. And this is the reason they're getting into lending, right? They've wasted a lot of money, a lot of time, and to try to become a neo-banking platform. But now they're reaching close to that mark that their VCs are going to say that, time is up, right? You have to show what you have built. And I think as a last ditch effort, they're getting into lending. Like everyone is getting into lending. Paytm is becoming profitable because of lending. So Groww understand that this is a very, fastly growing market in India. So I feel this is just their last ditch effort that just capture whatever value you can capture out of this lending space. And I think this doesn't seem like a well thought out strategy to me.
I mean, the neo-banking thing, I think this is just part and parcel of the blitz scaling model, right? Companies do move fast, they break things, they try stuff out, like you said, throwing things at the wall to see what sticks. I don't see any reason why that's necessarily a bad thing. They had the capital, and they still have the capital to experiment and try to find out what's going to work the best. And eventually they did find out that, lending is probably the best way for us to monetize our platform, add value, and position ourselves well so that when we do try to exit either through an IPO or M&A, we are a valuable company. It just makes sense to me. I don't think there's anything wrong with this approach. And speaking of trying different things out to see what works and what doesn't work, one recent development is that Groww is actually building its own AMC business. So what this means is that instead of just offering mutual funds from other AMCs, they are actually building their own mutual funds and offering those to their customers, and they're charging fees for that. So in the world of mutual funds, there's something called a TER, that is a total expense ratio. And basically that's the fee that an AMC charges a customer for access to this mutual fund, and that's a recurring cost. This fee can be anywhere between 0.8% and 2.25% based on the type and size of the mutual fund. And this ratio is charged on the total amount of assets under management. So this basically means that the total amount of money that's being invested by all of the users in a particular mutual fund. And so this is why back in 2021, Groww acquired Indiabulls mutual fund business, and using that, they launched their own AMC called Groww MF. This AMC has 11 mutual funds under its umbrella, and it's a huge monetization opportunity for Groww. Now, it's not clear yet which of these is going to be most successful. I mentioned lending earlier, and now I'm also talking about this AMC. Which one is actually going to end up generating more revenue for Groww remains to be seen, but they're both huge opportunities for Groww, and they're also both relatively recent developments for the company. But in the next couple of years, maybe in the next 3 to 5 years, we should start to see Groww increasing their revenue significantly through these two offerings.
So Groww is not the only one who's getting into AMC business. Even Zerodha has their Zerodha Fund House, which is their AMC business. And I think the key difference between both these companies is, while Groww is focusing on active-only mutual funds, Zerodha is focusing on passive-only mutual funds. And let me explain you what's the difference between these two. Active mutual fund means that each of these funds have a fund manager who actively buys and sells stocks on customers' behalf. And that is why active funds are costly to manage, because you have to pay a certain fee to this fund manager. Passive funds, on the other hand, they just follow a standard index, like say Nifty 50, stocks which are changed based on the index automatically. And that is why it requires low cost to operate compared to active funds. And the thing is, passive funds are becoming more popular around the globe. For example, while in India, 17% of investment currently goes into passive funds, the figure is 50% in the US, and it's growing rapidly. And I think it's because of this strategy, their focus on passive-only mutual funds. I feel in the long term, Zerodha's AMC strategy is going to be more profitable and more sustainable.
Okay. So we've gone back and forth. We've had this debate. Now let's share some final thoughts. For me, the reason why Groww wins over Zerodha is that Zerodha has kind of been slow and steady, right? Which conventional wisdom says slow and steady wins the race. You know, the turtle versus the tortoise versus the hare, right? And you could make that argument, certainly. But I think right now, the need of the hour for Zerodha is this growth mindset, right? Blitz scaling. They need to expand quickly because there's so much competition right now. They can't afford to move slowly and safely and conservatively and sustainably the way that they have in the past. Competition is really, really heating up. And in this kind of environment, you need venture capital, you need fast, rapid expansion. And that's part of Groww's DNA. I mean, that's been there for them from the start. And so I think just that in and of itself is the reason why Groww will win, because they're more aggressive. Yes, that is definitely more risky. There is more potential for Groww to crash and burn, right? When you're moving that quickly, the risk is higher, right? Suddenly, if the investors pull out or some market dynamic changes and Groww has to quickly pivot or change their business. I mean, there's n number of things that can go wrong with a venture-backed company as compared to a profitable bootstrapped company, for sure. But I think just in terms of capturing more market share, Groww is much better poised to do that in the next 5 to 10 years than Zerodha, purely from a DNA perspective.
Okay, so in my conclusion, I just want to summarize the main points that I made. I think the fundamental difference is in the DNA of these companies. So if Groww tomorrow stops growing, they won't get next round of funding, right? And that's why their entire focus is just to onboard more people, just spend more on marketing, and they just keep increasing that, total number of users metric. But on the other hand, Zerodha, they don't have such need to grow that, right? So they can grow more sustainably with more revenue and more profits. And that's what we have seen in last, so many years. So every year both their revenue and profit is growing by 30, 40, 50, 60%. And I think even in the long term, that's going to differentiate Zerodha from Groww. They're not worried about having more number of users. Their only focus is that, top 20 to 30 million Indian customers who have the highest spending power. And I think even if 5 years down the line, if let's say Groww has 100 million customers and Zerodha has only 30 million customers, I'm pretty sure I can, say it, that Zerodha is going to have more revenue and more profits with less number of users than if Groww has, let's say, 3x or 4x, number of users. So I think that's what's gonna differentiate both the companies.
All right. Well, we hope that you enjoyed this debate. Let us know in a comment down below who you think won and also who you think is going to be in a stronger position in 5 to 10 years, Groww or Zerodha.
Yeah, and we'll see you guys in the next debate.